Good morning, everybody. Welcome to the start of a new week, certainly for us anyway in the UK. It's the 9th of May. I'm Joe, joined by Steve. Good morning, Steve.
Morning, mate. All right.
How you doing? All right?
Yeah, good. Good, thank you.
Excellent. Okay, let's get straight into it then. So we've got a bit of catching up to do. Obviously, we weren't in yesterday in the UK, but we'll focus on what happened late last week because we had the non-farm payroll number out, and that was a stronger than expected number. Came in at 253,000 for April, compared with expectations of around 180,000, although there was a downward revision for March to 165,000 from the original figure of 236,000. There were small increases in manufacturing and construction employment for the month. There was a small decline in jobs for wholesale trade and temporary help categories. We also saw wages growth accelerate. There was a 0.5% monthly increase in average hourly earnings compared with expectations of 0.3%, with a year-on-year increase of 4.4% from 4.3%, and again above expectations of 4.2%. Credit conditions continue to tighten. The Federal Reserve Senior Loan Survey recorded a tightening of credit standards and weaker demand for business loans. There was also significant widening of spreads, which will make loans more expensive. Overall, there was some relief that there had not been a more substantial tightening in credit conditions, and markets were continuing to monitor the US debt ceiling developments, with Treasury Secretary Yellen warning that cash would run out on the 1st of June. The euro drifted lower. The dollar failed to hold on to the initial gains after the jobs data, but did manage to post a limited net advance, and the dollar overall edged slightly away from 11-month lows. The euro lost ground on most crosses, with the latest Centex data recording a fresh decline in economic confidence for May. We've had some Swiss inflation data. The prices were unchanged for April compared with consensus forecasts of a 0.2% increase year on year, slowing to 2.6% from 2.9%. And also below expectations of 2.8%. And now the focus is firmly on tomorrow's data, which is the US inflation's data. There will be an element of caution ahead of this. Consensus forecasts are for the year-on-year rate to hold at 5%, with the core rate edging lower to 5.5% from 5.6%. Okay, as always, if there are any requests for markets, now's the time to get them in. Either post them into the live chat on TradingView or wherever else you're watching it, and we'll do our best to cover those. Steve's going to kick us off with a look at cryptocurrencies.
Yep, I certainly am. I'm going to share a screen first, obviously, because that always helps. And yeah, a bit of a move for crypto or Bitcoin. We'll start with Bitcoin. Over the last 3 days, we can see the price action overall looks to be forming a bit of a head and shoulders top pattern. We can see this quite clearly on the chart. This is from the rally from around about the 20,000 level. So can quite easily work out what the measured move target for this is. But we had a left shoulder formed around towards the end of March. Then we had the pullback to the initial neckline 27th of March, the head posted on the 14th of April, and then the neckline 24th up to this right shoulder where we've tested on 2 or 3 occasions and sort of held around about the 30,000 level. So based on that, we've got these head and shoulders forming, and we'll have basically needed to get a break of the neckline. Remember, that's the key part to it. And then we can basically put in a, let me get rid of that, mess that one up, Stevie. So we can measure from the head to the neckline. And the measured move target for that would be a move to 22,600. However, it's not active yet. We haven't broke the neckline, so be aware of that. There's good potential for that if we get a little bit more weakness in the cryptocurrency space. But yeah, as you can see, you've got this upward trending support line coming in today at about 27,250. A break of there really opens up the downside, and you can see we would expect a fast move lower. Resistance, as I say, 30,000 on that. That's the initial resistance on crypto, on Bitcoin. There was a bearish dark cloud cover formed on Saturday on Ethereum. This is quite a strong reversal again. You've got this head and shoulders formation taking place here. The neckline for this is downward sloping, So there's still a little bit of work to do on the downside. Support coming in at 1790 on Ethereum, with resistance up at the right shoulder 2021, and 1730, remember, is quite a pivotal level in Ethereum below there. And measured move target for this bad boy would be around about where the base is, around about this 14,632, where this previous support was. XRP, again, this formation looks a bit toppy. You could squint hard and say there's a head and shoulders there, but it's just a top, quite a aggressive top formation. Potentially, the double top has been formed with this high here. The neckline broken, and we've extended lower, probably hit the measured move target for that. Next level of support, if we do manage to clear this 42 level, which was a previous swing high, so that was resistance turned into support around about March, and since then we haven't really tested it until now. So we've actually got down to the lowest levels we've seen since the 22nd of March. So that's quite an aggressive move to the downside. Next support coming in at 35.5 cents. I'm going to take a look at commodities and I see a request for DAX, which we will come back to after Joe sort of takes care of the FX. But yeah, let's take a look at gold first, because we saw a really sort of like aggressive reaction lower in gold on Friday. This is on the back of non-farm payroll, bearish engulfing candle on the day. We moved lower and stalled at 2,000. So $2,000 is obviously would be a psychological level, a big round number, and we saw a nice reaction from there after price action stalled and reversed sharply higher. So as soon as it dropped off, we spent about 4 hours down there, and the rally back, the squeeze higher, we made it up to 2030. That's the short-term resistance. The spike high that we saw on the Wednesday got up to 2067. So we got sort of like a mass of resistance up there: 2067, 2070, 2075, the all-time high, and the correction lower looking quite nice at the moment. And yeah, it wouldn't be sort of too well. I mean, there's definitely the 2000 support for me is a really decent level to hold on to, especially from a bullish perspective. And yeah, looking at the sort of like trying to break this, we need to really break the range or break above the 2030 to get excited about potentially taking out that all-time high again. But for the moment, looks to have failed. On the crude oil, we had that spike lower again. That was last Wednesday. We had the spike lower. That was an overnight spike. That was like a volatility spike where price action, that was after the Fed, broke lower aggressively by about $4, caught everyone by surprise. But by the time it was only like over a short time period, and by the time the Brent crude opened up a few hours later, it was back up at the levels that it closed at. Then since then we have had a decent correction higher in this corrective channel formation, and we have stalled at a nice level of downward trending resistance as well. So today that comes in around about the $73 level, and we are still below the 4-hour Ichimoku cloud. So still on the back foot a little bit with this. Need to clear that level of resistance around about the $74 level to think about the move higher again. But potentially a nice stall there on that overreaction last week. As you can see, you don't really see the same sort of price action on the Brent crude oil. Brent crude oil trading just under a $4 premium to WTI crude oil, and the reaction higher has stalled a little bit ahead of that downward trending resistance. But you can see 4-hour short-term price action, although we've had this nice corrective rally, is still bearish. Natural gas has reacted from that just above the $2 level, and we topped out at 232, which was quite a pivotal level previously. So that's the level to watch today. We're not far away from there now. Just had a little bit of a pullback, and looking for that to attempt to extend higher again. But at the moment, remains a little bit like crude oil, under pressure. So let's take a look at the FX, and then we can dive in and take a look at DAX for Sanadid.
Thank you. Okay, so dollar index not really going anywhere at the moment. We did look at this as a wedge pattern, suggesting it may have broken out and we would see a corrective move to the upside, but it hasn't really played out. So in fact, I'm just going to get rid of it for now because prices are very sideways and choppy at the moment between 100.82 to 102.23. We can see very tight range here. In terms of the candles that we've seen in recent sessions, there's been some pretty long wicks on those. So a lot of indecision and a lot of choppiness. So while this support at 100.82 continues to hold, then there is potential for a bit of a bounce to the upside, but certainly in the short term, those rallies are being capped at around 102.23. Obviously, if we do get a break here, then there's a fair amount of fresh space for us to move into on the downside, potentially towards this 61.8% fib level. Overall, the trend remains bearish. We can see here we are trading in a downtrend. So while this continues to hold, this is pretty pivotal. But again, a break is likely to lead to a further move to the downside. On the upside, yeah, if we can get above that 102.23, it might set things off a little bit to the upside, but we do have further resistance here to consider at 102.83. If we can get above these levels, then potentially we could start correcting higher. But for now, it's pretty mixed. And lacking direction. So maybe we need a catalyst there to really get that going, and maybe that'll be CPI tomorrow. You look at Euro US dollar, similar kind of situation. Prices rallying into major resistance at 110.75 and failing to break above just at the moment. As time's gone on, we've allowed the trend, so the bullish channel, to kind of catch up with price. So where we were over here on the left hand side, there was a bigger drop that would be required to get to the lower end of the channel, but now that's not actually that far away. So we've got a 50% fib level in here and the lower end of the channel, which may provide some short-term support. If that's broken, then it could trigger a further corrective move to the downside, but obviously we're going to need to see a decent move higher on the US dollar. But I think the favoured move at the minute, as it is with the dollar, is potentially for a breakdown. It's for a break up here above that 110.75 level, but still further work to be done. Looking at cable, we can see that that touched a major level that we've got highlighted here at 126.66. We have to go back to these highs that we posted in May 2022 for the last time the prices hit that level. And an interesting reversal at that point. We can see here a bit of a shooting star candle was formed yesterday. So prices on the FX markets were open yesterday. And we can see there was a bit of a rejection there. So a bit of weakness in sterling into that major level of resistance. So a pretty clear level there that we need to overcome. And if we can, then it may start triggering further gains towards the next level of resistance up at around 129.80. Let's look at dollar yen. This hasn't been doing an awful lot, and it's a similar kind of situation. We rallied into some resistance here at 137.91 last week, but prices were rejected, and we've seen a pullback. Prices kind of stabilizing over the last few sessions. Seems to be a bit of an uptrend, maybe trying to form here, but all in all, this is pretty choppy and lacking direction. Let's take a look at some of these commodity currencies. We can see here Aussie versus US dollar. Range bound again. We found some support down here at 65.67. Then we've rallied into these previous levels of resistance. So a couple of previous swing highs here between end or start of April and mid-April. Prices have rallied into that level again and failed to overcome it. That's at 67.93. A break above that, and we may be looking for higher prices here and further demonstrating that there is weakness in the US dollar. But again, a bit more work to be done on that at the moment. Let's take a look at some of these yen currencies before we wrap it up. Euro yen, we saw a breakout through resistance here last week on Friday the 28th. We've seen a nice pullback to retest this newly formed support level. So far, I'd give it the benefit of the doubt. There was a bit of an overshoot here, but it does seem to be holding for the time being. So maybe we'll start to see some sideways and some consolidation type price action in the short term before maybe a continuation higher in line with the dominant uptrend. Let's take a look at Aussie versus yen, see what that's doing. We saw a break there of the downtrend. We've also seen a break of horizontal resistance at 91.29. Prices above that yesterday and now holding that level on the subsequent pullback. So be interested to see if that encourages the bulls today to continue buying that and maybe push prices higher towards the next resistance here at 93.03. Okay, I don't think there's any other requests on currency, so I'll leave that there. And Steve, you can take a look at some of the indices for us.
Okay, going to look at DAX. That's been the request. So Germany 40. Let's look at the weekly chart. It's pretty interesting. This is like the all-time high going all the way back to November 21, and also we also topped out as well 3rd of January at the start of last year. Since then, we've had this like huge down move, this huge reaction higher. We're back up close to those all-time high levels, in fact. However, price action from a weekly basis, although it's been positive, we've seen the last 4 weeks of price action um, showing a positive spin to it. The actual candles are actually hanging man candles, and they're not so positive. So they're basically where the price or participants are testing the resilience of the bulls, and it seems to be sort of like basically you get the price action on the Monday starts higher. We test the downside support and then rally back and close higher on the week. So you get this nice looking green candle, but with this big tail. So that's a little bit of a warning sign for me. They're the sort of candles you see at the top of markets. So although we are moving higher, I wouldn't get too carried away. You know, I'm the doomsday giant when it comes to all indices. But yeah, so this week we've got off to a slightly slower start, a little bit of a setback from Monday and into today. We'll take a look at the daily chart, but it's not much of one really. If you look at the price action on the daily chart, we had this potential for this like treble top, which played out quite nicely. And we're back up here. So this previous resistance level around about 15,700 is acting as a decent support level now. In fact, last Thursday we got down to 15,659 and then reacted higher. So this level around here, that's where you would call support basically. So it really needs to clear that to the downside to get any sort of like form of aggressive move. On the top upside, we've got the 16,000 level doing a job, and that looks pretty decent at the moment. And even on the, if we look at the shorter term chart, like let's look at the 4-hour chart. For me, this is like a bit of a bullish flag. So if I'm looking at it from a slightly more longer term perspective, I'm looking at there's a potential for a top here. Shorter term perspective, this is shaping up quite nicely for another extension higher. So for me, here's the pole here. Measured move target for that would be, let me just quiet the dog down. This is the pole here. That's the sort of move you could potentially get for that, 16,270. So that's what we're looking at. Yeah, I mean, that'll be at the all-time high. So definitely one to watch. So it goes against everything I do. Indices, I'm always looking for the potential downside, only because it's a much more aggressive type of trade. So that's the sort of ones I enjoy. They're very sort of like very short term and very aggressive to the downside when they do break, because there's a lot of panic thrown in there. When you do get these rallies higher, it's a bit more steady. So says a lot about my sort of trading style, I suppose. On the Euro 50, which is like a European index as well, so very much based around the Germany 40, different constituents, obviously. We are seeing the similar sort of topping formations here. So I would really be looking at this as potential for maybe a double top. This is a weekly chart, remember, hanging man candle, and it looks pretty negative. We've broken down below, maybe a little bit of support for 4,287, reacted higher. So it did make a bit of a fight back based on Friday's price action. I don't really know what happened with this candle on Monday. That doesn't look quite right, but it may have opened up a lot lower and then rallied higher. We could look at the hourly chart to sort of like get some idea. But for me, we've had this nice sort of like impulsive move higher from Friday, the 24th of March, up to the highs, and then we have this bit of a stall. But yeah, resistance coming in at 4,357, and above that 4,418. Yeah, let's take a look at FTSE, which has is in a bit of a like downward spiral as well. We've seen the reaction lower. We've got a little bit of a trend line there, which we can let's collect a few more points. 1, 2, 3, 4, 5, 6, 7 points here. So that's really where trendline resistance I'd expect to come in around about the 7,840 level. Again, we've had this rally higher, reaction higher from Thursday's low up, and a little bit of a flag, bullish flag formation forming there. Let's look at the daily charts on the US. The US, it's sort of like going through a bit of a different cycle, but obviously had that great reaction higher from Friday's non-farm payrolls, bullish engulfing candle on the Dow. Price action on Monday was quite muted, and today we haven't had that follow through yet. So really needs to sort of get follow through quickly, otherwise we'll be back on the supports. Nasdaq looking a little bit more positive. Again, that's trading at quite heady heights. Next area of resistance probably another 450 points higher, down at up at 13,700. Nice sideways channel we have here, and we're at resistance at the moment. So decision time for Nasdaq as well, and the S&P also about 60 points lower than where we'd expect resistance to come in at. So, but you can see Friday's price action again was a bullish engulfing candle. So pretty positive, but the follow through hasn't really transpired. So I think the jury's still out on the indices, Joe. Yeah, I'm not really sort of like, I'm looking for some sort of like inspiration for the gun to head, but can't really find any at the moment.
Okay, well, let's give you a bit of time then and just run through the challenge itself. So Steve and I are going to pick 2 trade ideas on the stream, which we do every time that we do a stream. And the idea is that we're just coming up with these ideas pretty quickly. Bit of technical rationale behind them, but a few basic rules that we need to stick to each time because we want to maintain a very consistent approach here. So each of the ideas have stops and targets. We have risk reward ratios that are better than 2 to 1. And these ideas are closed out at 9 p.m. UK time unless the stops or the targets are reached prior to then. And in terms of money management, we risk 1% of trading capital per trade. And we are doing this on a live account, which Steve will show us in a minute, but we can also have a quick look at our trade ideas from last week. So I traded New Zealand dollar, Canadian dollar, looking quite nice on the daily chart here. We can see on the right hand corner, we had a nice kind of bearish channel that had formed, and we saw another touch point in that yesterday, on Friday, sorry. If we click the play button, because this was the hourly chart which I set the trade up on, we can see that it moved nicely down towards the target and was just under 2R on side
Nice
on
one.
the close on Friday. So that would do nicely. Steve, I think you traded gold, but I don't think you published it. I don't know if we can have a quick look on your screen.
Yeah, I might have deleted it, Joe, actually. Let me have a look. Hold on 1 second. It would be on Oanda. I can talk you through it. I do know what happened. Basically, I was going for support around here. Obviously, we had non-farm payroll out, and I was looking for maybe a break of this downward trending resistance. But we got the opposite reaction. Got a lot of dollar strength rush into the market, and price action broke lower, and I was stopped out. Luckily, we were only able to put on half the size because of the size of our account. We risk 1%. But it only allowed us to risk 0.5% because you can't do fractions of a contract on this account or with this broker. So I think I lost about £11. I stopped out on the trade very quickly, very swiftly indeed. I was a bit annoyed about that because there was an argument for both cases. You know, resistance has held. If it breaks down below that 20,030 level, there was obviously a good reason to sell, but my stop was at 2029. And I got stopped out a fraction below that, so held in quite well on that stop. Yeah, so
I mean, that's the lottery of non-farm payrolls, right? It was,
absolutely,
it's
yeah.
one of the biggest, market moving events, and it always creates volatility. So it is a real lottery. But I think, the thing you highlighted there about the contract size, it would be so easy for somebody new in the market or who's, still trying to find their feet to think, oh, I can't get this on in the size I want, so I'm just going to round it up and go
Yep.
for risking 2 lots when, if we were to do it based on accurate numbers, you'd only be risking maybe 1.1 or 1.2, at which point then your risk is increasing quite dramatically. And it puts a big old dent on your account, and that's, work harder that you have to work to try and get it back. So hopefully some lessons there for people watching. In terms of our account balance, Steve, can you just bring that up quickly for us, just so we can have a look at where we're at?
Yeah, not doing too bad.
2061. So about
Yeah.
just over 3 hours from where we first started. So we started with 2,000. We risked £20 pretty much per trade. It's a little bit higher than that now because the account is in profit. And we can see there the New Zealand dollar CAD win for 36.35 and Steve lost for 11.87. So that's always what we're aiming to do. We always want our losses to be significantly smaller than our winners, which means we don't have to have particularly high win rates in order to be successful. And you can see there some of the wins, 35.52. Always far greater than the typical loss that we have, which if we get stopped out should be around about 20. In some instances, it'll be less.
Yeah.
Cool.
Decent.
Right, let's pick some new ideas in, Steve. I'll give you a bit of time, shall I, to pick something?
Yeah, I know what I want to do now, but I'm happy for you to go first.
Okay.
Unless you do Euro 50.
No, I'm not doing Eurostox 50. I'm actually sticking with New Zealand dollar CAD. This is what I traded last week. We can see here that into this downtrend, and we've got four clear touch points. We saw prices fail at that level on Friday, posting that big negative candle. Yesterday, we tried to recoup most of that, but have come up a little bit short. So overall, still expecting this downtrend to hold. And I want to have another crack at this based on what I'm seeing on the daily. Looking at the intraday, this was the trade that I did on Friday. We can see a retest into that, pretty much that level again, and a failure. So I'd like to have another crack at this, expecting this area of resistance to continue providing resistance and looking for a continuation lower. So I'm going to have to go a bit better than that because the risk reward ratio isn't quite enough. Let's have a look at where the volume point of control is here. So it's around current prices, which is encouraging for me, suggesting that prices will fall. Got a bit of a vacuum there. So what I might have to do is just tighten the stop loss a little bit just to scrape into 2-to-1 territory. So I'd like to sell that now, Steve, at 84.66 roughly.
Yeah.
Stop loss at 84.96.
Yeah.
Target 84.06. Is that 2-to-1?
That's 2-to-1, mate.
Okay, let's have a go at that then. So Steve's got that on. You can see the order's been placed. That's gone in live. I'll also get it posted up onto TradingView. So if anybody wants to follow it throughout the day, they can do. And Steve has already suggested he's going to be looking at EU50 today.
Yeah, I've sort of just talked about this, about I love sort of like trading the downside to these sort of like markets, but the one thing I'm sort of like considering is at the moment both the DAX and let me just get rid of that at the side. The DAX and the EU50, from a short-term perspective, have sort of had a dip down this morning and reaction higher, and looking to that for that bullish flag type thing in the EU in the DAX, but also the EU50 showing it. On the 4-hour chart, we're sort of in the Ichimoku cloud. We've reacted from this downward trending resistance line, so it's a reverse trend line, reacted higher from there, so it's found a bit of support. And on the hourly chart, looks to be forming a bit of a bullish hammer. We've still got 30 minutes to go, so this could all go terribly wrong very quickly. Are we forming that top, or is this just a setup, as in a bullish, a bit bullish flag? So I'm going to go with I'm going to buy this. So I caught everyone out there, and I'm going to look to place a stop just below where we're trading now. So this is a really sort of like quick trade, or could be a quick trade. And looking to target, where am I looking to target? Somewhere up there. So let's get the what this will look like. Something like that. 43. I might just leave it around there. Risking 1%, 20. Yeah. Let's just get that on, and then we'll marry it up with the levels that we got in there. Excuse me. Yeah, so I'm long of EU50, looking for a rally back up towards previous resistance.
Happy days. Okay, good luck. So as mentioned, we get those published up. There's my one ready to go. If anybody wants to follow that, please feel free to do so. Steve will do the same in a moment. Onto the data today for what we can look forward to for the day ahead. So 5:05 this evening, UK British summertime. We've got New York Fed President Williams speaking. Maybe a market moving event. Maybe he could mention, plans for the Federal Reserve in terms of upcoming policy decisions. But it's not put down as a high impact event on the calendar. What is a high impact event, however, is the US consumer prices, the US CPI data, which is due out tomorrow. That has been pretty much one of the biggest market moving events of recent months. So we will be poised to see how prices react to that. And then on Thursday, is it Thursday? No, Thursday on the 11th, we've got the UK policy decision, the Bank of England, with regards to interest rates. And if they're obviously going in line with what we've seen already from the Fed and the ECB, chances are we're going to see another rate hike in the UK. So we'll do more focus on that closer to the time. But for now, that is it from Steve and I. And we'll be back in the morning with another roundup.
Yep. Cheers all.
Have a good one. Bye-bye.